Hello traders, Gary Wagner here, just about 12:45 in Honolulu, 6:45 in New York. It is Thursday, 10th day of May, 2018, and this is the Daily Report for Gold and Silver. A weaker U.S. dollar has propped up precious metals pricing, with gold having a modest gain, up about $9 on the day at $1321.80, and about a 24-cent gain in silver at $16.76. The decline in the dollar took it to 92.57. That is down 31 points, 0.3%. And the Dow continues to rage to the upside, 24,739. That's a gain of 196 points. Bitcoin continues its modest slide, now trading very close to 9,000 at 9,085 and 9,100 in the CBOE and CME futures exchanges. A respectable move in gold pricing today, with June gold futures closing up $8.50, currently fixed at $1321.60. It takes pricing out of the narrow and defined range that has been so characteristic over the last 4 trading days. Because over the last 4 trading days, not only has the price relationship between the open and closing price of that session been narrow, but 3 out of 4 of them have resulted in nominal down days. On a technical basis, there are 2 things that I'm actually very pleased with. The first is that yesterday's low, which actually came below the 50-day moving average and touched the 50% retracement right at around 1,300, and we know that that's an important support level that held. The second thing that I'm impressed with in terms of today's move is when we look at the closing price and recent highs that have come into the market, we close clearly above those highs and are putting ourselves at a new level. I believe this new price point of 1318 support. Another reason that I believe that current level is an important level is because it does occur as a Fibonacci harmonic. When we look at our 2 different data sets, one going from 1240 up to these tops at 1369, our second coming in from these lows at about 1300, going up to the highs, we get a confluence of price in that the 38% retracement from the longer data set occurs roughly at the same price point as the 78% retracement level of the shorter data set. Another important facet of today's upside move in gold is that it is a direct result of dollar weakness, and the result of the last 3 days in dollar index trading is that we can identify a fairly interesting bearish reversal pattern known as a bearish harami or a harami cross. The reason that we can call it a harami cross is that the inside trading day, yesterday's trading activity, truly contained a doji. Now, a bearish harami in terms of criteria is that after a defined uptrend, we've certainly met that, you get that final hurrah or a large green candle moving to a new higher high, and that is followed by an inside trading day. And in the case of yesterday's trading day, it is a slight downtick, but it is truly a doji, which is then followed with our confirming candle, a long red candle. These 3 candles together give us a bearish harami confirmation and could certainly be indicating a conclusion to this most recent uptrend in the dollar index and signaling lower pricing in store. Therefore, my recommendation is to maintain our current long position in gold as well as our stop. However, we will look to move our stop up soon. And traders, a very respectable upside move in silver, gaining over a full percentage point, 20 cents. What is most impressive to me is the fact that it opened right at the 50-day moving average and then had a substantial move to the upside. However, we can see some real potential resistance still at the 200-day moving average. I would feel very comfortable on any kind of close above the 200-day moving average, but today's upside move and the potential for further dollar weakness signal a high probability that we could see silver go back and challenge these recent highs that came in at around 1725. And traders, continued weakness in Bitcoin futures. Although it's moderate weakness, we have seen prices decline from the point in which Bitcoin futures challenged unsuccessfully $10,000 per coin and began to trade lower. We are now much closer to 9,000 at 9,120, and the real question remains is, will major support hold, which comes in at around 86.21 per Bitcoin and is currently based on Bitcoin's 50-day moving average. Traders, on today's show, we talked about dollar weakness, but more importantly, the identification of a pattern called a Harami cross. Now, a Harami cross to a Western trader is simply an inside trading day, and alone it is not the strongest of a key bearish reversal indicator. However, with a confirming candle, meaning a large down day, as we saw today in the dollar, that bearish cross becomes a pretty strong indicator that we could be looking at potentially lower pricing in the dollar, and that would be extremely supportive for gold and silver pricing. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the daily wrap-up and review. Bye-bye.